So it's been 13 years since ET Now was established, and Mr. Nilesh Shah, who is the MD of Kotak AMC, has seen us grow leaps and bounds along with the market. He was with us all throughout the market cycles, from the levels of just 4,000 to 18,000 over, and now back to 15,300. Mr. Nilesh Shah has been a part of the ET Now's journey since our inception. So Nilesh, firstly, thank you so much for joining us today and all throughout these 13 years, and we wish that going forward we have you more and more on the channel. But firstly, please tell us, how has your experience been with us?
Thank you, Srishti, for having me over here. Wish Team ET Now a very happy birthday. Now you are entering teens. It's been an incredible journey. And the biggest change which I have seen, there was a time when FPIs used to sell and our markets used to correct. There was a time when we were all constantly looking forward to FPI's flow movement to figure out which way markets will move. And all of us were, having a dream in our heart that one day there will be counterbalance to FPIs by way of domestic investors. And when ET Now launched a Rise India campaign, uh, that dream kind of got supported. And today we have seen massive FPI selling, and yet markets haven't corrected as much as it would have otherwise corrected thanks to domestic investors. It doesn't mean markets haven't fallen. Of course markets have fallen, but there is a counterbalance emerging to FPIs by domestic investors, and that's truly a matter of pride in last 13 years journey.
Well, yes, absolutely. We have seen the dynamics of the market changing. But Nilesh, if I may ask you, that 13 years you just described your journey, how have you seen the markets? But now, now that we are sitting at 15,300, 13 years from now, where do you see the markets headed? Any ballpark number that you have for the Sensex or for the Nifty?
I really don't want to predict where the numbers will be, but if we capture the opportunities, then I think the growth in next 13 years will be far ahead of what we have seen in last 13 years in real terms. Now, please remember that inflation was different. In the last 13 years, inflation was in high single digit. Next 13 years, despite current phase, inflation will be probably in low single digit. So to that extent, nominal returns will come down. But the real return, if India captures its opportunities well, will be better in next 13 years than the last 13 years.
Okay, Nilesh, but talking of opportunities and specifically India, so over the years we have really shown our steel when it comes to IT or when it comes to pharma. But going forward, where do you think that India has such a big room where we can show the world that where India stands? And from the stock market's perspective, which are those sectors that from now on could really bear good fruits when it comes to the returns?
So clearly, one thing which will do well will be financial services. In India, even today, we spend a considerable part of our savings in import of gold. On a net basis, India is exporter of capital rather than importer of capital. We have sent more money abroad for import of gold than all the foreign direct investment we have received. We are like a poor man who wants to do blood donation even though they are in need of blood transfusion. So financial services which will manage India's savings, whether it's banks, mutual fund, insurance companies, or some other vehicle, will continue to do well. The second thing will be related to manufacturing in India theme. We have proven our prowess in IT and generic pharma, but we are now seeing revival in India's manufacturing. We were seventh largest auto market in volume in 2014. Today we are fourth largest. We were 12th largest manufacturer in mobile phones in 2014. Today we are second largest. What we did in automobiles, what we did in mobile phone, we have to keep on doing it in every other manufactured items.
Well, yes, thank you so much for highlighting all of those areas where India can really prove their bet. But Nilesh, if we see the current market situation, a lot of dynamics are at play, a lot of points are at play. We are fighting with inflation, the crude is on the boil, there are rate hikes happening. Uh, Going forward, what's your take on the markets? Are we really going to be a bit of a is this year, if we talk about 2022, then it's going to be a bit of a nervousness, or once the market settles down, we can once again leap into that bull market trajectory than we were talking while back in 2021?
I think a lot will depend upon how events happen. If tomorrow there is further escalation in Russia-Ukraine situation, which impacts oil prices, commodity prices, undoubtedly our markets will correct further from here. If we are unable to control inflation, then undoubtedly our market will be weaker. So a lot will depend upon how things shape up. In our Kundli, both Rahu and Ketu are higher oil prices. If oil prices goes up 10%, our growth suffers by about 20 basis points. Inflation goes up by about 40 basis points. So undoubtedly, market is in a challenging period, and we need little bit of luck in terms of lower commodity prices, especially oil, before market can recover.
Well, talking of luck, Nilesh, a lot of people are blaming it on that because, as you may also know, that a lot of people entered and they were not that lucky because they entered that bull market run up right at the end, and now they are, because of the sell off that we are seeing in the mid and the small cap, they're really not happy with the current market situation. But on the other hand, if we see the SIP inflows that are rock solid, month over month, we are seeing that growing. This retail participation that we are seeing in the recent times, going forward, do you believe that because we are dealing with such kind of a situation, going forward as well, the confidence of these retail investors that are really serious with their SIPs will continue to grow? Or the current market situation can hit that as well? And my second question is this a right time to enter into a lump sum SIP kind of a thing? Because markets are looking a bit of a shaky right now, but going forward, when the things changes, when the sky is once again clean, then things may flourish back to normal levels. Is this a good time to enter into SIPs?
So I really want to salute retail investors and lakhs of mutual fund distributors who have reached SIP to crores of retail investors. Today, mutual fund industry gets about 12,000 crore in SIP flows. It is all thanks to the efforts of mutual fund distributors and maturity of retail investors. And today also, most equity funds are delivering double-digit SIP return over 3-year, 5-year, 7-year, 10-year, 15-year period. Albeit 1-year returns are negative. And I think people have now realized that when markets are correcting, your SIP becomes more valuable whenever market will bounce back. By putting same amount of money, you are able to buy more units or more shares. And as and when market bounces back, that SIP will start delivering you better return. I think the experience or Agni Pariksha of March 2020 really worked for investors. In Jan 20, most of our equity funds were delivering high single digit to double digit return. In March 20, we were delivering negative return for a 3-year period, mid single digit return for a 5-year period, and around similar returns over a 10-year period. Our returns would have halved by half. And at that point of time, people who continued their SIP or who topped up their SIP are today enjoying double-digit return. There is a word of mouth publicity going by experienced, satisfied investors of SIP to others saying that SIP Karo Mast Raho. Now, if you want to start SIP, today is the best time. Whenever you have money, it is the best time. But don't start SIP with 1-year, 2-year, 3-year horizon. Start with 5-year, 10-year horizon. Don't get afraid if SIP returns are negative, because SIP returns go through up and down. But if you maintain your discipline, eventually you will make real return.
Okay, so SIP Karo and Mast Raho is the headline that we are getting from you. Thank you so much. It gives a bit of a confidence to all of those investors. But Nilesh, back then when we had that amazing bull run between 2020 and 2021, we kept on asking you how to build a portfolio in a bull market, what should be your strategy, and you guided us well. But now if we see Nifty, then we are just shy of around 3% away from entering that bear market after once we have that 20% correction. What would be your suggestion for somebody who is looking to build a portfolio during the bear market?
So bear market are actually sale market. When I was a kid and we had to do shopping, my parents always used to wait for a sale. The merchandise never used to change, but in the sale, you will get it at a cheaper price. That was the lower middle income mentality. Now, the bear market is actually an opportunity to buy same companies at a lower prices. We should, like we were waiting for sale period to start our shopping, bear market should encourage investors to buy securities because you will be buying similar companies at a much cheaper prices. This is the nature of the market. Someday they'll go up, someday they'll go down. When I started my career, there was one gentleman who advised me, Poonam and Amas, full moon and no moon, they are part and parcel of nature's cycle. Same way, Teji and Mandi are part and parcel of nature's cycle. After Teji, Mandi will come. After Mandi, Teji will come. So please maintain your dharma of asset allocation. Be disciplined in your investment and stay invested with discipline. I'm sure you will see better returns on portfolio than today.
Yes, when it comes to maintaining the portfolio, and you did touch upon the other asset classes as well, maybe it's a good time to enter into mutual funds and direct equities as well. But what about other asset classes, Nilesh? If in this personal money show, we are here to make a portfolio for our investors, what kind of an allocation would you be looking and you think is the best in the current scenario? Because at one point of time, we are seeing that the equities are going down for now. And on the other contrary part, we are seeing the bond yield surging up. What should be the allocation look like for you?
So as an investor, I'll be equal weight to equity at this point of time. And every correction, I will be increasing my equity allocation as markets are below their historically average valuation. I'll be overweight large cap to begin with and marginal underweight small and mid cap. But if market continues to correct, I'll start becoming overweight small and mid cap in the correction. On the fixed income side, as rates are rising, either I will be in dynamic bond fund where fund manager manages duration, or I will be at the shorter end of the curve, floating rate bond fund or a short term bond fund, so that rising interest rate does not impact my return beyond a point. On gold, I will keep some allocation, maybe about 5% of portfolio. I believe over a period of time, gold has potential to outperform fixed income. So these are broadly the three asset classes which are available. But for an investor who can take direct exposure, I'll recommend them to consider REIT and InvIT in lieu of their fixed income portfolio. REIT InvIT also provides slightly better return with slightly higher volatility comparable to fixed income.
Okay, thank you so much, Nilesh, for that. And here's my last question to you, because we really had a bit of a confidence when we are talking to you, and it feels great that at 13 years we are having you once again. But what we are seeing for the Indian markets right now, we some bit of a outperformed the rest of the markets. Right now, if we see and the current market setup that we have, RBI is having their own strategy. They are taking cues from the US, but Indian markets are still trying to hold up at least by a couple of percentage points. Going forward, do you feel that in the next decade, India has the potential to outperform the rest of the markets as well?
So over the last 8 years, we delivered double the return of our emerging market peers. We witnessed COVID. We are suffering from higher oil prices. And in last 8 years, we moved from being 10th largest economy to 5th largest economy. We increased our market share in global GDP from 2.6% to 3.2%. We increased our share in global FDI from about 2.1% to 6.7%. So clearly, despite challenges, we have done well. Going forward, I have no doubt in my mind that if we capture our opportunities, if we deliver on growth, which we had delivered in the past, if we deliver on governance, which we have done in the past, and if we add a tinge of green, managing environmental and social, I think we'll have a deadly combination of growth with governance and green. No other country can offer that kind of combination. And our returns will be far better, comparable, far better than any other peers.
Well, yes, thank you so much, Nilesh. We also hope the same. Thank you so much for joining us today at ET Now, and it was a pleasure speaking with you.
Thank you.